While everyone's been glued to the stock market and crypto, a huge shift has been happening in the shadows of global finance. It's being led by two of the world's biggest powers, and most people are totally missing it. Officially, Russia and China together hold a stash of gold worth over $600 billion. But what if I told you the real number is much, much higher? What if this is all part of a quiet, coordinated plan to challenge the one thing that has propped up the entire global economy for almost 100 years, the US dollar? We're going to break down why these two nations are hoarding gold at a rate we've never seen before. This isn't just about stacking shiny bars in a vault. This is a high-stakes game of financial chess. We'll look at the event that kicked off this modern-day gold rush, how their strategy actually works, and most importantly, what their endgame means for your money. So, what's the big rush? Why now? To get it, you have to look back at one pivotal moment in 2022. After the invasion of Ukraine, the US and its allies did something unprecedented. They froze around $300 billion of Russia's foreign currency reserves. For the first time ever, a G20 nation's sovereign assets were just blocked. That sent a shockwave through every central bank on the planet. This was the ultimate demonstration of what experts call dollar weaponization. For decades, the world has run on the US dollar. It's what you use for international trade, and it's what most countries hold in their savings account. This system gives the United States a staggering amount of power. Since most dollar trades eventually pass through American financial institutions, Washington can hit a switch and cut a country off from the global economy. The freezing of Russia's assets was a brutal wake-up call for any nation that might find itself on the wrong side of U.S. foreign policy. The message was crystal clear. Your dollar reserves are only yours as long as you play by Washington's rules. For a country like China, with its own rising tensions with the U.S., this was an unacceptable risk. Suddenly, relying on the dollar wasn't just convenient, it was a massive strategic vulnerability. This is the problem these countries are desperately trying to solve. They're rechasing financial independence, an escape from a system where their economic fate can be decided for them. And their shield of choice is the world's oldest and most trusted asset, gold. As the old saying goes, gold is money, everything else is credit. It's a physical asset you can hold with no counterparty risk, and it can't be frozen or canceled by a foreign power. This realization has kicked off a global trend of de-dollarization, as central banks pivot away from paper currencies and back to the raw security of physical gold. You have to hand it to Russia. Their strategy has been a masterclass in economic self-defense. President Putin started a de-dollarization policy long before 2022, steadily ditching U.S. assets. But after the sanctions hit, that plan went into overdrive. The gold they'd been stacking for years became a critical lifeline, allowing them to sidestep the Western financial system and keep trading with partners like China and India. And here's the wild part. The value of Russia's gold shot up to a record-breaking $326.5 billion by the end of 2025. This was not just from buying more, it was because the price of gold itself exploded, surging from around $1,800 an ounce in 2022 to nearly $5,000 by early 2026. That price surge alone helped Russia offset a huge chunk of the assets frozen by the West. So, even as Russia was forced to sell some physical gold to fund its war efforts, the soaring value of their remaining pile meant their overall gold wealth kept growing. Gold now makes up about 43% of Russia's accessible international reserves, a share that has strategically eclipsed its US dollar holdings. They've effectively built a financial fortress, using gold to shield their economy and back their trade within the growing BRICS alliance. If Russia's strategy is a fortress, China's is a silent, sprawling empire of gold. Officially, the People's Bank of China holds about 306 tons of gold worth around $319 billion, but this official number is widely seen as just the tip of the iceberg. Here's the part they don't announce. China is the world's #1 gold producer, digging up around 380 tons a year. This gold is mined domestically, so it doesn't have to be bought on international markets or reported in the same way. This has led many analysts to believe that China is quietly building a colossal, undeclared stockpile to avoid setting off alarm bells in the West. Some estimates suggest China's true holdings could be over 4,000 tons. Even their official actions are telling. The People's Bank of China announced gold purchases for 14 consecutive months through the end of 2025, a clear signal of its intentions. China ADOS motives are a mirror image of Russia, ADOS, fear of sanctions, and the strategic need to get out from under the US dollar. With the world's largest pile of foreign exchange reserves, China is uniquely vulnerable to dollar weaponization. So, quietly swapping those dollar assets for physical gold is a low-profile way to hedge that risk. On top of that, trade data shows a massive flow of gold from Russia to China, with Russian gold shipments surging ninefold in 2025 to a record high. It's a clear sign of a coordinated effort. So the game plan is pretty straightforward, but its impact is huge. Systematically sell off holdings of US government debt, also known as treasuries, and use that money to buy physical gold. This move simultaneously lowers their vulnerability to the dollar system while bulking up their own balance sheets with a neutral asset. And it isn't just Russia and China. They're just the leaders of a much bigger movement centered around the BRICS group of nations, which includes Brazil, India, South Africa, and a growing list of other countries. These nations are tired of the economic whiplash tied to US policy. Central bank gold buying has exploded, hitting over 1,000 tons per year recently, a massive jump from the pre-2022 average of around 400 to 500 tons. A 2024 survey showed that a huge majority of central banks plan to keep increasing their gold reserves, citing a deliberate move away from the dollar. There's even growing speculation around creating a whole new financial ecosystem. Talk is swirling around a new BRICS settlement system with proposals for a digital trade currency nicknamed the unit, potentially backed by a basket of 40% gold and 60%